All right, awesome. Let's see. Record. Hey everyone, welcome back. For those of you tuning in for the first time, my name is Jay Garrett. I'm here with Anna Safonova and Alan Hack, co-owners of NJ Realty Pros. And we are here with, for the third time now, super accountant and our knowledge consultant, Chris Whalen. Chris is very informed on everything's going on. He's been giving us updates on the coronavirus first and how small business owners can get relief. And today we have another topic. We have an update on the PPP today, and then we also have a new topic with everything that's going on, how businesses that were affected by the civil unrest can get relief as well. So we're going to get started. I'm going to let Chris start it off, and let's get rolling.
All right, first thing I want to do is talk about some of the PPP forgiveness update. I'm just going to share my screen for a moment, and so you should see that on the screen right now. So everyone would remember that initially the PPP forgiveness period was 8 weeks from the moment your loan was funded. And that was a pretty tight period of time, especially for people that aren't open yet. So imagine you still can't open, you're a hair salon, but you got your money 4 weeks ago. There's no way we're going to be able to pay people enough because we're not operating yet. So cooler heads prevailed, thank God. And as you see here, the 8-week period has been extended to 24 weeks from the date you were funded, which is, I thought it was just going to be 16 weeks. So this gives everyone plenty of time to spend that money on payroll and payroll costs, as it's called. And also, they decreased the minimum amount you need to spend on payroll from 75 to 60%, which is also fantastic because some people are going to be opening up and they're not going to be at 100%. So getting 75% of payroll back in there might be hard. So decreasing it to 60% was great. Then that leaves 40% for rent and mortgage interest and some utilities. So I urge everyone to make sure that you're at least meeting that 60% of payroll or payroll costs out of 100% of your PPP, and be sure to spend the other on those the acceptable other costs. Remember, you just can't spend the other 40% on whatever you'd like and get that forgiven. So there are rules within that too. So this is great news. The other thing to remember, if you have the PPP and you also have unemployment, we want to eventually see which gives the greater benefit, and we'll send the lower one back. So I get this call a lot. People are very nervous. They feel they're doing something wrong if they have a PPP loan coming and they're also getting unemployment. But we need to see how much unemployment you're going to get eventually, and then we'll decide. So there's no rush for that. You're not doing anything wrong. We have many, many months ahead of us where we will be able to give the money back to either department. Does that make sense to everybody?
Yes, and you can't keep both, obviously. It has to be either one or the other, just to clarify.
Right, exactly.
I have a question. Is there still the rule that that 20, I forget what the percent, it was just under 25%, no matter what, has to be paid back? Or remember we were talking about that last time?
Well, I think what Jay is talking about is that if you're a sole proprietor that doesn't have any commercial space, simply has a home office, which is a lot of people, a lot of clients I have, then your PPP was simply based on your net Schedule C from 2019. And
Yes.
So if that's the case, then only 73.85% of that PPP can be forgiven, because you can't use the other portion towards rented home, if you will. If you had commercial space, you could. So that's why you have to be careful with that other percentage, the other percentage, that 26 and change percent, because you could keep that portion, but that's not forgivable, and that could be a loan later. So I urge everyone to use the 73.85% if you're in this circumstance where you are a sole proprietor with just a home office. That's the important nuance there.
Now, I have a question because just for me personally, I have W-2 employees, and I'm a sole proprietor of the business. And this extension allows me to spend money that I attributed to me, I guess, in my, I use the cap on the, the cap for the independent contractor, and they approved it. But now I have more payroll costs across 24 weeks. Can I use that for my W-2 employees?
Yes, that's a very important question. So the restriction doesn't come with you paying employees more than you say would have averaged last year. It's important to not pay yourself more. So that's very important, that you really should only have for the owner, whether it's a self-employed person or whether you're a W-2. Let's say you have a corporation and you have a W-2 for yourself and other employees. You really can't go over 8 weeks average of your payroll for last year. So you can give more to your employees than they would have gotten. That's fine. That's what it's there for. So everyone has to be careful to make sure they're paying enough to their employees and not overpaying yourself during this period, at least for the first 8 weeks.
Hey, Chris, with regards to, like you're saying, independent contractors, right? They get 1099s at the end of the year. However, does it also affect in terms of, can they use this money, if you will, for estimated taxes that, we make on a quarterly basis?
Well, I mean, if you're a sole proprietor or you're a subcontractor and you got a PPP, then just as we talked about, 73.85% of that could be forgiven, and then you could use it for whatever you want. It's just like a draw. Or if you're a W-2 person, you're going to take your owner, you're going to take your W-2 or your wages. You could spend it on anything you want. It's not forgivable, right? So only specific things within 100% of the PPP are forgivable.
And how do you document paying yourself if you're on a Schedule C? Or do you know what I'm saying?
Well, yeah, right. So the Schedule C usually would take a draw out of their bank account and put it into a personal. So I don't even think that's necessary, to be honest with you. Once it's funded in an account, that becomes part of your net income. So what I have people doing is if they want to draw out a check to themselves for the 73.85%, to a personal account. So that at least shows you're drawing out the exact amount that we know is forgiven. If you want to do that, just so you have a check or a debit, I don't think it's necessary 100% of the time. But if you to feel better, take that money out, put it into a personal account. If it's already gone into a personal account, then it's already done. If you had that PPP put into, the 73.85% is already forgivable once it's in a personal account, based on the law right now.
Gotcha. Okay, cool. All right. And then you had this other stuff about the deferral, I guess, deferral and extended coverage period, right?
Right. Exactly. That's, like I said, that's not really that important. But they're extending how long it's going to take for you to start having to pay something back, or the deferral period for profit and loss. So if everyone just sticks to the rules I've given them, and now we have an extension from 8 to 24 week period, and they spend money on what they're supposed to, they'll be fine.
Okay, great. And my last question, and I actually had a few people ask me this, is there going to be another round of funding for PPP and or SBA, the EIDL loan?
Well, they definitely still have money. I mean, they promised to fund it through September, I think, for the EIDL and the PPP to the end of the year. So I don't think that the money is still available. I have banks that are still writing PPPs today. So I think that question sometimes overlaps with stimulus checks, right? Mm-hmm. Separate, the individual stimulus checks, and they might have another round of stimulus. Remember, there was a $1,200 check per person for many people. So they might have another round of that. But I don't see anytime soon that they're going to stop funding the EIDL or the PPP. And remember, with the EIDL, a lot of people got a message that said they're only handling agricultural loans right now, but that just means that they're giving them a turn, right? Remember, the SBA got 14 years of applications in 14 days in last month. So they gave agriculture a shot where they have a week or two to get those loans done. Then they're going to get back to regular. So don't think, if you have a confirmation number and you haven't been denied, they eventually will get to you. They're working very hard, even at the state level. I'm not necessarily a Governor Murphy fan, But in this case, the state unemployment systems have been working hard. These SBA people have been working extremely hard. And I've been very impressed with everyone. I know things take time. Everyone has to be calm because they're trying to get to millions of people that never needed help before. And it might take a few weeks for the kinks to be worked out for you to get your money. So just be patient and know that if you're due the money, you'll eventually get it.
Okay,
Awesome.
I have a question. If they, let's say, hypothetically approved an application for an X amount, and that X amount is nowhere sufficient for you to run your business, is there a way to challenge that, go back to them and request a different number, or how would that work?
This is for the SBA EIDL?
Yes.
I haven't seen that yet. I mean, we're just at a point where they're approving people. So there might be a way, but they haven't presented that yet. I don't see it yet. I'm sure there'll be a way. But I doubt that's going to be something that they're going to want to do for a lot of people. And you have to have a real justification. You also could go for a regular SBA loan then. Don't forget that there are other SBA loans available. I could see if your loan was based on wrong information, right? Let's say your income was too low and your actually was higher. So I think if we can show that the loan was based on information you gave that was incorrect, then that might be a possibility. But I haven't seen the facility yet for that.
And last, I think, question. With PPP, with the extension, new people applying, are they still basing it on 2 months payroll, even though it's a 24-week period, or can they request on 6 months payroll, I guess, because
no, the PPP is still going to be based on 2019 payroll costs for the most part, 2.5 times the monthly average. So that the calculation of the PPP is the same. It's just that for forgiveness now, our term is much longer to expend the money.
Okay. All right. So if somebody needed more money because they're being affected longer by this, they haven't really implemented anything on that. They're still working.
Right. I don't think that your PPP is your PPP. Mm-hmm. And I want to stress one last thing before we move on to the next topic. I urge everyone, please, when it comes to the EIDL, especially because that's definitely a loan that's not forgivable, is don't use it to finance losses in the business. I did a blog post a few days ago that I really think that unless we get 100% occupancy and normalcy, I'm telling businesses not to reopen with limited, say, 25% occupancy unless they're sure they can break even without using that money. We should not use the loans to finance losses. That's the nightmare scenario where people are going to get stuck in that 8-9 months from now when they have to start paying it back. So I urge people, unless you're sure from a cash flow analysis that's done with your accountant, that if you can only reopen with limited occupancy when you can break even with current earnings. Very important point. Now the PPP, I'm going to get it forgiven. So I use that during this time. So if it's done the right way, now I have 24 weeks for the PPP. Why did I want that? Is because if we have 25% June 15th, well, we might get 50% July 15th. And that might be a good time so we can reopen, use the PPP correctly, keep everyone on unemployment till then, and then use the EIDL correctly. So please, everyone, just one last time, be very careful. I know everyone's excited like it's Christmas morning because they want to reopen. But if we only have 25% without any indication of when 100% is coming, what if it's 6 months from now? Most companies can't sustain that, and it's going to be a disaster. So stay in a holding pattern until we know that the level of occupancy is going to afford you at least a break even. I'm sorry to go over that too many times, but I get that question all the time, and I'm feeling this collective excitement around the country. Believe me, I feel it more than anybody. They want to get that restaurant open, or they want to get their ice cream store open, or whatever. If you have seating somewhere in your establishment, please take your time and have a prudent discussion with your accountant about a break-even analysis, okay?
That makes sense.
Great tip. Yeah, because especially with the margins that some of these businesses like the restaurants run on, it makes a huge difference. Like 10% makes a huge difference. So 75% less, like you said, it's better sometimes to be bowing out and waiting until it's better than giving it a go during.
Hey, if you're a restaurant and you've been doing takeout and you've been getting by and it's been breaking even, well, then it can only help you to have seating. So again, I don't want to be negative. I just want people, this is a most critical time in business in the history of my career that I'm going through right now, that people like me have to give the right advice, the honest advice, even if it's hard, to make sure we protect people so they're here for the next 5 years.
Absolutely.
That makes sense. Thank you for sharing that.
Yeah, and I think that's a great transition to our next topic, because a lot of businesses, especially people we know, like personally, that own businesses in New York and some parts of New Jersey, have been affected by the current unrest. So I guess we can cover the different options available to them.
Right. So we're talking about a casualty loss. Unfortunately, that's what's happening in the country. This could be a hurricane, it could be civil unrest, but we have something that's extraordinary. And so how are we supposed to handle that? So let's say you had a storefront that could be destroyed. You have inventory that was stolen. And so there is a facility within the tax system for you to account for that, to make sure you get credit for that loss. Okay. So most people would think, well, we can account for the rebuilding. That's true. We're going to buy new inventory, but don't forget that if you own a building or have fixtures in a building that were destroyed, unfortunately, well, then we can apply for some kind of deduction for that. All right. So let me just share my screen again, if that's okay.
Sure.
So you see on the screen, this is an IRS publication 547. Hopefully you can see it.
Yep, everything looks good.
And this is the main publication that would guide you on what you need to do in order to account for the loss. Now, of course, the first thing everyone should be doing is call their insurance carrier, because your insurance carrier, if you're covered for some of these things, which you should possibly be, they're also going to have adjusters come out. They're going to have online systems for you to put information in. So call your insurance carrier, and call soon, because a lot of them are inundated now with calls, unfortunately. So we want to get first in line as much as we can. So this is a good publication. Get it online. You see right here, very simple to find, publication 547. I urge everyone to take a look at it. And the next thing I want to talk about is how it works. What kind of information should you be capturing? Because this is not something you normally do, because there is something to do with fair market value that's still left at the end of the day. So I'm going to switch gears here a little bit. So here, this is actually from an IRS publication. So this is a schedule for office furnitures and fixtures. So it shows you what you might have had in your inventory. This might, for example, you might print out your fixed asset list from your tax return. And that might be a good guide, right, to see what I had. And if you look here, what's interesting is that it wants your original cost. And then it wants to say, eventually, did I get insurance reimbursement for this, right? Because insurance is going to give you, right, when you go through, you're going to have to give them an asset list just like this. That's why making a list like this is important. They're going to give you a value that they're going to give you in your insurance claim, right? Mm-hmm. And so we need to know what each of those amounts are, because as you can see here, right, there we have a fair market value before the casualty, right? And then we subtract the column. So if you look here at the very end, we have $200. So it's important to see that we need the fair market value of what you have in the store. So like, for example, let's look at the bookcase here. That was $250 when I bought it. But remember, when the insurance people come in, they're going to look at what the fair market value is. Okay, so that could be low, it could be high. So it's also something for everyone to be thinking about. Wait a second, I had these cases of these jewelry cases that were worth $25,000 10 years ago, right? What are they worth now? So I just want to manage everyone's expectations about what insurance might give you. All right. So the most important thing is that after all is said and done, when you're going to have a net loss that's not reimbursable through insurance, then we can eventually take that on the tax return. We could take it as a full loss. So, but it's important from my IRS perspective that we need all of this information. It might seem a little unruly, But just so everyone, if you're going through this, big or small, you can, like I said, you can go to this publication, you can write to me, I'll send it to you. This gives a lot of good examples. Here's another one, for example, your computers, right? Same exact kind of columns, everything you can think of. Insurance is gonna want a master list of everything. Even a lot of things, remember, they're not in your fixed asset schedule, right? A lot of people buy office equipment, they expense it. It's not that much money, but look, there's a good example. Look how many things on the left side of the screen here are things that you buy that, oh my, I have, that's a total loss it could be for me. So that's why doing this quickly and writing everything down while it's fresh in your mind before you start cleaning up, right?
Right.
We want to make sure we do this. So here, cars are another thing. You could have a car that was damaged in some way, or it could be a total loss. So same thing here, year, make, model. So this again is different than most people are used to when they do their accounting or they buy something, because they're not really considering the fair market value. Now remember, if you have a big loss, the insurance adjuster is going to come out. Everyone's had a car accident, right? Where Geico comes out and they send somebody out to take a picture of your fender. Now in this case, this could be very large losses. Remember, the insurance company is not on your side. The adjuster's there to save the insurance company money. So I urge everyone, if the loss is large, to hire a private adjuster to come in. They're going to take a cut of something, but in my entire career, it's always money well spent, especially because then the insurance adjuster knows that you have your own watchdog that's also doing this work. So it's sometimes it increases. I've never seen an insurance adjuster not pay for themselves, very rarely. So remember, the insurance adjuster comes out with their blue shirt on that says Geico, and they're all friendly. And believe me, they want nothing more than to give you nothing. Oh, that mouse is only worth a penny. It's not 50 cents. So get a private insurance adjuster. Do you guys have any specific questions about this?
I do actually. So aside of fixtures and physical items, obviously it costs to rebuild, right? You have to get contractors in, you have to get people in. Now, what can you write off? What are the limitations? How would that work in this kind of scenario?
Well, there really aren't really any limitations if something's reasonable. So that's going to be part of the insurance adjustment, right? We're going to come up with a cost, and that's why it's important to have your own contractor come in and give an estimate on certain things, even multiple contractors. I might need an HVAC person and a drywall person, right, a framing person. So you want to make sure that, again, you get the right amount of money from the insurance company based on the true rebuild cost. Not because the insurance company is going to say, oh, it's a commercial space, retail, it's $100 a square foot to rebuild this, when it could be $175 based on where you should be. So it's very important to remember that you want to manage all of this more than anything, especially with the private insurance adjuster, and get your own professionals on the other side to get real numbers that you could present to them, because there's going to be an argument. There's when you have your own contractor say, honestly, it's $150 a square foot and we're $50 off. Well, then we have to have that power and that detail, so the insurance company will buckle us, because many people don't do this, and so they don't have someone. The insurance adjusters rule, and then they're going to lose in the long run, because what happens is they're going to get a substandard amount of money, which means they're going to have a substandard rebuild. Okay, so I know everyone's flustered. It's in this situation, but this is time to focus. And this rebuild is the most important thing you're going to do in your career right now. And we want to make sure we get the insurance going to pay every penny that they have to pay to bring us to where we were.
For many, absolutely. And now I know you also mentioned, obviously you want to submit that as soon as possible, right? You want to reach out to your insurance carrier and at least start the process. Now, is there any kind of time frame? Because, again, your store might be affected, your business might be affected. You can have, let's say, COVID and you're in a hospital or something along the lines. Is there a kind of time frame where you have to submit that in a period?
Well, it has to be a reasonable time. So remember, an insurance contract will tell you that the moment you think there is some kind of loss that's covered by the policy, you need to let them know that. So that's your obligation. So the longer you wait, the longer things change, the longer they can say, oh, we didn't have the opportunity to come right after the disaster And so they can then say that you're not covered as much. So remember, insurance companies love fine print. So that's why I said in my blog post, the insurance company needs to be called immediately upon any occurrence that could impact that policy. So
And
if you have COVID, what'd you say? I'm sorry, Jen.
It should be documented too, right? So this way you could show that, hey, I called you on this date. Because if they say like, well, your roof was off for 2 months and you didn't call us for 2 months and everything got more damaged.
Right.
Because there are roofs off, I mean, from things that have burnt down, like stuff
Right.
like that. They could try to pull that. So that was just a thought that I had to point out. But
oh, there's no doubt. I always take names and numbers, agent numbers, tech support people, whoever you're dealing with. A lot of times there's portals online that you're dealing with for this. And so remember, if you're dealing with an online portal, and this is for anything. So let's say you have 4 or 5 screens for Allstate that you have to fill in to do an initial claim for this. Well, quite often they don't give you the opportunity to print that at the end. So I urge everyone to, before you hit submit, if everything's right, go back to the first page and do a screenshot and save those images, right? So we can prove what we submitted. Think about how often you submit things and they don't give you the option of giving you all your data.
Yeah.
Absolutely.
Right.
I had an issue with the idle. When I filled it out, it displayed it and something happened where the tab got closed and they don't send you an email receipt with your confirmation number.
Right.
So I don't know my
always,
confirmation number.
it's always good.
Happens
Don't
a lot.
forget that you can, on every computer, you can hit the print screen button on every keyboard, almost every keyboard. If you hit that, what that'll do is it'll give you a window where you're able to take a screenshot, a partial, if you want to, and then you can save that right within that little app that's built into Windows and save it as an image. So I just, it might seem like an extra step, but I want to have every damn item I keyed in. And then when I submit, I want that submission confirmation page, right?
Absolutely. I had a quick question on, so now, and I don't have a full understanding of this, but if you were, say, depreciating an asset like a car or computer, and then you get reimbursed for it through insurance, is there any way that could be a gain of some sort depending on the value ratio?
Well, usually not, because they're usually dealing with the fair market value. So in this case, you have a loss. They're not going to want to have you have a gain unless it's something extraordinary. So that's why you're dealing with fair market value, right? So you can't be off, if you know what I'm saying. It's not based on the cost basis.
Okay, great.
Give me 1 second.
Sure. I guess while Chris is away, I've been getting he's back already. So before we move on from this, we'll stick on it. All right, cool. Go ahead. Sorry about that, Chris.
It's okay. So again, if there's any more questions, of course, I'm always here for all your clients and your networks and contacts, as you all know. It's been, again, for business owners, again, I try to stay not political. Everyone knows me about that. I'm just trying to help everybody during this and just trying to give good business direction and just go forward. I'm trying not to dwell. I have a lot of sad stories out there from clients around the country. And I try not to get involved in the emotion. I'm just trying to give them advice to go forward and rebuild the best I can.
Absolutely, and that's the goal. And you've been providing obviously a lot of information between everything that happened with COVID, with PPP. So we appreciate it, and I had a lot of, my colleagues, agents reach out. So, we're grateful obviously for this information, and anybody can use this and take away anything at all. That's valuable. Absolutely.
And I think, hopefully, I know Jersey's opening slowly. People have always asked me my opinion about what do I think about what's going to happen. I think, the economy is going to come back incredibly strong. Just me being on the street level here, I can't imagine that it's not. I think, of course, some people will remain unemployed, but there's all this pent up demand for everything. And that hasn't gone away. So I caution people when things are open, you might be overwhelmed. Like I have a lot of hair salons, for example. I'm like, you're going to have senior citizens lined up in the parking lot 6 feet apart for a mile with masks on.
What are you trying to insinuate? This gray hair is too long?
No, absolutely not. Alan always looks great. He's, he's very fortunate to look. Like I said, I thank God I have a mind. If I had to deal with how I look, I don't know. I think I'd be sweet.
And mine's getting out of control. So,
but I think that I see a lot of cohesiveness in the country. All types of business owners I have, so they're all ready to be open and rebuild. And I don't see anything. I don't see any of the current problems in the country having a large economic effect, except unfortunately for those communities, right? So I have so many people that are opening new companies now. I just formed a few LLCs this week. I mean, we do that here. People that are ready to open up once COVID, once those restrictions loosen up. In terms of real estate, everyone knows I'm a very big proponent of investment properties. I urge everyone to contact these three perfect experts that you see on your screen with me. I think that there's a lot of money still out there where people want to invest in property. That hasn't changed. And I think landlords are going to be doing even better. Think about it now. Unfortunately, there's going to be foreclosures, delinquencies, right? People could lose their homes. So the need for rental space, commercial and residential, is only going up, especially residential.
Always.
All over the country. So it's a very good time to become a landlord. And remember, there are always properties that are in MLS for forever homes. And we know that, but everyone wants to sell those. And I tell my investment property people, we want to find the house that I don't want to sell to a forever home, which is 99% of the properties out there. And so I urge everyone, if you've never been involved in investment properties, I'd like you to contact these three realtors here because they can really educate you on the benefits. They can dispel some of the rumors and the fear. Everyone thinks that, a lot of people think investment properties are going to bring an Animal House situation. It's going to be ransacked. But don't forget that the reason why that propaganda is out there is because the large financial firms who don't make money on it have demonized it the past 80 years. So Goldman Sachs and Fidelity want your money. They don't want you to put into real estate because they didn't make money on it. So, and I have a separate seminar, which I think what we should all do together on is what's better investment, real estate or the stock market. Real estate, if done the right way, beats the stock market every time. Every time. I mean, I've done this for 33 years. There's no doubt that at least it should be part of your portfolio and pension plan thinking. I know I'm going off on a tangent here, but it's very important that with rental real estate, how come I'm so interested in it? Well, in the late 80s, my dad was going to retire from his company, and he had a pension. He worked for a big company. And so he told me, hey, son, a lot of the junior people there are not going to have pensions anymore. And so when I learned what kind of money that was. So I said, well, how do I replicate passive income at 65 years old, right? Pension income. Well, the other type of income is investment income, interest and dividends, but it's rental income. So what we want to do is what I've done systematized it for decades now. I want to get all my clients to the point where you have rental properties that are putting off a net $5,000-$10,000 a month.
Absolutely.
The stock market cannot do that. So please consider real estate is something that's to be used for passive income into the future. Rental real estate is not purchased to go up in value unless you're flipping. So that's separate. That's the good thing about investment properties. Imagine that. I can buy real estate. I never have to care if it goes up in value because I'm never selling it.
As long as you're holding on to it for long enough as well, and the market will perform up and down no matter how it will reflect. As long as you hold on to it, the money is there 100%.
Right.
Sorry, Chris.
Even better, I was going to say, if you look at the average rent over time, the average rent pretty much goes up throughout anything just because space is limited. It's becoming more necessary as the population grows.
Right.
So even without appreciation, you get higher passive income over time.
The last thing I'll say about it is that with the big market correction, right? We had a market correction, what, 9,000 points for just no reason. So not that I don't love financial advisors, but there's if I lost 30% of my portfolio in 24 hours, then a lot of what you're doing is guessing.
Correct.
So at least now diversify, because all my rental properties didn't go down by 30% in 24 hours. So
right. In fact, some of them probably went up. Believe it or not, we're at such an extreme shortage right now. And I guess we'll close on this is we had before the civil unrest that's occurring, which is very unfortunate. We had the coronavirus, and it started a mass movement of people from New York to New Jersey, and there was a limited inventory. So what had happened was the demand was there and the supply's not. And the recent unrest has just fueled that. And there's a lot of people that would much rather be in the suburbs a little further out for safety reasons, health reasons. And right now, anybody who already had an investment property or anybody who owns real estate, believe it or not, it's not really covered as much I've seen in the media, but actually values are going up. I'm in bidding wars. Like I had an offer, $5K. Yeah, $5K over ask. I had my client offer the other day. We were the 10th best offer. That's the kind of environment we've seen. So if there's anybody looking to sell too, it's a good time to probably get top dollar given the demand right now.
Absolutely. And I know we talked about it a couple of days ago. We pulled out the statistics for 2019, April 2019 on new listings, and April 2020. So if my memory is not mistaken, but April 2019, we had over 6,700 properties. Is that correct? Do you recall, for Monmouth and Ocean?
I believe so. I just did Monmouth recently, so that's in my head. I know Monmouth alone went from 3,500 to 1,200, but that's in new listings. But the actual number of closings was within like 12% of last year. So 66% less inventory, but almost the same amount of closings. It's just pushing the prices even more and creating more demand.
Absolutely. So bottom line is, don't keep all eggs in one basket. Contact Chris, contact us if we can help with anything. And I don't have any more questions, Jay.
No, I think this was good. This was great. Thanks so much. Great information as always, Chris. And do you want to just real quick either put up a slide with your information or just say it and we'll put it in the post?
Yeah, sure. It's I'm Chris Whalen, CPA, and of course you can reach me at my website, chriswhalencpa.com, or call me directly on 732-673-0510. And thanks everyone for having me. I look forward to the next time.
Awesome. And everybody check out Chris's podcast and blog, because they have, if you liked what the info in this, it's like that on steroids. So it's really good stuff. You'll be glad that you went, and thanks so much, everybody. Have a great day.
You too.
Bye, guys.